Hey traders, John Fortune here with this week's Weekly Forex Forecast for the 3rd of June to the 7th of June 2019. As always, we're going to start off by looking at the US dollar index and oil before running through a number of markets, looking at the key levels of support and resistance in the process. I'm also going to highlight some of the targets that we're going to be looking for in this coming week and also for the weeks ahead. So let's jump over to the charts and see what the money is this week. As always, starting with the US dollar index. Now, in previous videos, we had highlighted the fact that we have now taken out the top here, forming what looks to be 5 waves up in the dollar index. However, we are still actually structured to the upside. So we're between, if you like, a rock and a hard place because we're still structured to the upside, but we are at a point where we could reverse in the dollar index. Now, this meant that last week we went into the markets with a neutral bias on the US dollar index, and you can see all we did last week was pretty much nothing. We pretty much moved sideways. So we are once again going into this week, because of where we sit in the dollar index, with a neutral bias on the dollar. And it means we're going to trade the individual markets on their own merit without a strong bias in the dollar one way or the other. So next market we're going to look at is crude oil. Now, last week we were looking for further declines in crude oil, and we did get those declines, and we did take out both targets set to the downside from last week. Very simply put, going into this week, we are looking for more declines to the downside in oil. If we can get a correction, and we'd like to see a correction and a pullback towards the 57.190, and if we can get a pullback and a retest of broken support from the past, looking to turn resistance at the 57.190, this is going to be a great place to once again start to look for bearish formations and patterns. And we're going to be looking at initiating shorts down towards the next key of support to the downside and the target set at the 50.34. So the first pair we're going to look at is euro dollar. Now, last week we started the week up in this area, and we said we were looking for a decline down into the target set at the 1.11190. We did get this move down into the target set from last week, and we bounced from here, as this is a key area of support. You can see it's bounced here a number of times in the past. As the euro dollar is still structured to the downside, we are only currently still looking for shorts in the euro dollar. What we would like to see, however, though, because it's now sitting at a key area of support at the 1.1119, and we don't have as much room to this target, to this support level as we did last week, the preferable move in euro dollar we'd like to see now is if we can break the 1.11190. This will give us a great opportunity to start to look for this pullback. And looking for a retest of broken support from the past, turning resistance at the 1.11190. If we get this kind of price action, this is going to be a great place to start to look for bearish formations and patterns. And we're going to be looking at initiating shorts down towards the next key of support to the downside and the target set at the 1.1022. So the next market we're going to look at is pound dollar. Now, last week we did break that key of support we were sitting at. And we said last week if we can break that key of support, we'll be looking for further declines to the downside in pound dollar. We did get those declines and we did break the support level, and now we are going into this week looking for further declines in the pound dollar as we are still trending to the downside. We're still structured to the downside in pound dollar. So very simply put, any correction in this area, preferably as always, if we can get a pullback and a retest of broken support, turning resistance, this would provide a great place to once again start to look for bearish formations and patterns. And we get the right kind of bearish setups in this area, we're going to be looking at initiating shorts down towards the next key of support to the downside and the target set at 1.2481. And if we can get a break through there, we're going to be looking down towards the next key of support to the downside and target 2 at the 1.2405. So next market we're going to look at is US dollar Japanese yen. Now, last week we did break that key area of support highlighted at 109.090. As a result, we are now trending to the downside still, and we are looking for further declines to the downside next week in US dollar Japanese yen. If we can get a pullback, and you can see we're very close to the target here, so what we would like to see to get some good risk to reward to this first target is if we can get a pullback towards, and preferably all the way to, broken support, turning resistance from the past at the 109.090. This will become the area we're going to start to look for bearish formations and patterns. And if we get the right kind of bearish formations and patterns in this area, we're going to be looking at initiating shorts down towards the next key of support to the downside and the target set at the 108.12. And if we can get a break through here, we're going to be looking down towards the next key of support to the downside and target 2 at the 107.32. So the next market we're going to look at is Aussie dollar. Now, last week we were actually sitting right here as we started the week, and we were looking for a correction back towards and possibly to the 0.69640. And you can see we finished the week here. So we actually did nothing last week in the Aussie dollar. So going into this week, we are still looking for further declines to the downside in the Aussie dollar. Just bear in mind this week we also have an Australian interest rate decision where the consensus is for a rate cut out of Australia, and this will be on Tuesday of the coming week. And just bear in mind that we also have an interest rate decision out of Europe, out of the ECB, also next week. And we also have non-farm payrolls on Friday. So in terms of the Aussie dollar going into next week, very simply put, we're going to be looking for further declines to the downside. We did have a small pullback, but only a very small one last week. Going into next week, we'd like to see another correction take place, preferably if we can come back and retest the 0.69640. This is going to be a great place next week. We're going to start to look to see if we can get some bearish formations and patterns. And if we get the right kind of bearish setups in this area, we're going to be looking at initiating shorts down towards the next key of support to the downside and the target set, the 0.6830. And if we can get a break through here, we're going to be looking down towards the next key of support to the downside, target 2, the 0.6746. So the next market you're going to look at is New Zealand dollar. Now, last week we were sitting in this area and we were looking for a move down into the target set from last week at the 0.6501. You can see we did get this move and we bounced, very similar to the euro dollar that we were looking at earlier, at 0.6501. We are now quite close to this support level again. We are only looking further declines to the downside currently because that is the way the New Zealand dollar is structured. It's still trending to the downside. So very simply put, if we're going to look for further advances to the downside in the New Zealand dollar, what we would like to see now is if we can get a break of the 0.6501, this will give us the opportunity to look for a correction and a pullback, preferably to broken support from the past, turning resistance. And this will be a great place if we get this kind of price action to start to look for bearish formations and patterns. And we're going to be looking, if we get this kind of move, down towards the next key of support to the downside and the target set, the 0.6425. So next market we're going to look at is US dollar Swiss franc. Now last week we were looking for a pullback into the 1.00670 area for further declines to the downside. We did get this price action. We did get those declines last week in the US dollar Swiss franc, making our way down towards the 0.9975. It would have been better if we'd respected this level a little bit better because we broke above it and down below it. But ultimately, we did get those declines from that area and we are still therefore only looking for further declines to the downside this week. So very simply put, going into this week, if we can get a pullback in the US dollar Swiss franc, preferably if we can get a retest of the 1.00670 for anybody not involved in this from last week, this would once again provide an opportunity to start to look for bearish formations and patterns. And we're going to be looking at initiating shorts down towards the target set from last week, which we're making our way towards now at the 0.9975. And if we can get a break through here, we're going to be looking down towards the next key of support to the downside and target 2, the 0.9927. So the next market we're going to look at is US dollar CAD. Now last week we did finally get that rally into the key area of resistance, the 1.35640, this target that we were looking for last week, and we turned almost to the pip at this target. We have been grinding to the upside in the US dollar CAD, taking out these targets to the upside. It has required a bit of patience, but we have now finally achieved the major target of the 1.35640. This is a very important area of resistance, and as a result, we would be looking from here for potential declines in US dollar CAD next week. So very simply put, we do not have them just yet, but if we start to get the right kind of bearish formations and patterns in this area, if we can get some bearish reversal patterns in this area, we're going to be looking at initiating shorts down towards the next key area of support to the downside and the target set at the 1.3401. And last but not least, we have gold. Now, last week we had this bullish reversal rally in gold to the upside, breaking above key areas of resistance in gold. So very simply put, going into this week, we have a bullish bias on gold. We are looking further advances to the upside as we are viewing gold as being structured near term to the upside now with this reversal. So very simply put, we're looking for follow through from this rally. If we can get a correction, especially as we're coming close to this target, if we can get a pullback towards, but preferably all the way to, broken resistance from the past, turning support at the 1.28720. This kind of price action would give us a fantastic opportunity to start in this area to look for bullish formations and patterns. And if we get this kind of price action, we're going to be looking at initiating longs up towards the next key of resistance to the upside and the target set at the 1311.27. And if we can get a break through here, we're going to be looking up towards the next key of resistance to the upside and target 2 at at the 1320.70. So that is it from me for this week, guys. As always, I hope you enjoyed this video, and if you did, please let me know by liking, sharing and subscribing. A big thank you to everyone who does that on a regular basis, a big thank you to everyone who comments, and a big thank you to everyone who has subscribed to the channel so far. I want to wish you all a fantastic week next week, and I hope you all enjoy the rest of your weekend. The only thing left for me to say, guys, is take care and don't forget to trade safely.